interest rates hit their lowest level in 4 weeks. It appears that we're going to get some resolution to this Iran conflict. So does that mean interest rates are going to all of a sudden plummet, or do we still have a long haul to go? From a trader's perspective, it appears they may have been right for these past couple of days, believing that a ceasefire is near. So we're seeing not only 10-year Treasury do well, we're also seeing oil do well. And it appears that President Trump's decision to blockade the strait was exactly the financial pressure that may be needed to get us to an agreement. So on the geopolitical front, things are looking good. But once again, nothing is actually settled. We could still potentially get some volatility. So I would make sure that I have all my information into my mortgage professional, so ready to take advantage of the market whenever needed. Now, on the data front, we did get some data today. We got PPI, Producer Price Index, came in at about half of what they were expecting. It means that the servicing sector is not showing future inflationary pressure. Now, it's only a 1-month read. I anticipate we're going to need to see a couple months. But again, it's just conflicting from the data that we got last week to the data that we got this week. But seeing the services side come back a little bit was good news. And what it did is it caused the 10-year Treasury to drop a little bit today. Do I think this potential ceasefire played into it? 100% it did. But on the data front, that was great as well. The other things we have to look out for later this week is initial jobless claims. If we get another read and it is above forecast, I believe we're going to see some downward pressure on that 10-year Treasury. Now, to answer the question, do we expect interest rates to plummet? Should we get a resolution to this Iran conflict? Well, before that, who the hell am I? My name is Kevin Weedmark, a.k.a. The Mortgage Mouth. Every day, bringing you up to speed of what happened in the marketplace, how it affected interest rates, what do we anticipate for the rest of this week, and of course, should we float or lock? I think if we actually get something inked and we get a resolution to this conflict, I do believe that we're going to see treasuries, which are now hovering around 4.25 to 4.3%, move all the way down to 4.15 to 4.2%. And this is why you need to have your information into your mortgage professional. Right now, today, and looking at interest rates, they've improved so much that I would have the ability to give somebody an interest rate just below 6%. That's right. Depending on, obviously, their FICO score, all the other parameters, it is sitting out there. So you want to make sure that you have your information to them so you can strike when it's hot. On the other front, should you float or lock? I'm in the float camp. It looks like resolution is coming one way or another. I would float unless I have to lock. All right. Hope you all have a great evening. Make sure you hit that subscription button. Talk to you tomorrow.